How you doing, Bucky?
There he is.
Oh man, great to be here with you both.
Fantastic to
Welcome
have you
to
on
the
the
Temple
show.
of Technology.
Give us a
My
little breakdown.
encore stop today, and then I promise I'm done going on podcasts.
Oh yeah, you've been on quite the
No,
tour.
honestly, roadshow. Like
Roadshow
4
max.
podcasts a day for the next 40 days.
Yeah, you
just
should just
run
keep
it
doing them
up.
all. Just wind up
You-
on like Hawktua.
Yeah.
Why is Bucky on Bill Maher today? That doesn't make
Yeah,
any
you
sense.
shouldn't be able to listen to a podcast in the month of May without having
Yes,
Bucky
yes.
join, at least for 5 minutes.
I want to get confusing with
just-
the politics. Do Tucker, but then do Pod Save America, and no one knows where your
We'll do 'em
politics
all.
align. Just talk
Do 'em
about
all.
early stage venture, right?
Yeah,
And
but
yeah.
I'm particularly excited to be here today because I think you guys have been hitting on some really big ideas in this podcast just in the past couple of weeks alone. I'd love to just kind of riff on those a little bit with you because I think they're so
for sure.
important, and I want to encourage you guys. And so, I think
what's the first one?
The first one that comes to mind for me is this sort of make hotel gyms great again
Right.
moment you guys are having. This is a really important discussion. It's not being had anywhere but here. There's clearly a hole in the market where someone needs to build an insurance product that allows for those folks hitting leg day on Friday to max out at above 500 pounds.
Yep.
Yeah.
It's just not happening out there. So this is a big problem.
and
I'm glad you're talking about it.
It's a
and
big market failure.
It's the kind of thing that maybe it's not a place that venture dollars should go, but maybe a group of investors should say hey, for the good of America, there needs to be a company.
I think
here
everything's
to
venture
market.
now. There will never be enough venture dollars.
Yeah,
I think
yeah.
we need to put this firmly in the venture bucket and then do
I think
20
it could
more.
be a fit in one of these, sort of AI turnaround funds that are being spun
Yep.
up by a lot of the big platforms. Like it's just got to happen, right? It's gone on for way too long, and all of us travel a lot, and we need to be dialed in, especially as professional yappers like VCs and podcasters.
Yeah, I mean,
absolutely.
maybe we just boycott all travel until the dumbbells get up to 100.
The economy
and
will
say,
collapse.
We'll start to have a conversation at 100.
Yeah.
And then go from there. we'll start the negotiation at 100.
Yeah, like a trade war, a real
Yeah, yeah.
standoff
Yeah,
between the
trade
capital allocators and the luxury hotels. This
Exactly.
is key.
Exactly.
So
Yeah,
I
I mean,
think it's
maybe-
our cross to bear, and I just wanted to say I'm glad you guys are talking about it.
Yeah, I feel
Well,
like there's an
we'll-
early stage bet
we'll
here. You
get
get
something
some
out there.
AI powered. You put cameras in the gyms, and then the underwriting is based on the form of the average gym goer. And so
Well-
if you just have like mass monsters in there all day, they're just throwing around the 100. No one's getting injured.
Well, there was an
Take those
infamous-
insurance
insurance rates down.
There was an infamous
Commodity
list.
hardware, off-the-shelf AI models, it's doable.
It's
Well,
doable.
there's an infamous list, VCs for Kamala.
Yes.
What if we had VCs for dumbbells? We could throw that up today.
Yep,
and
we should
potentially, I think
get-
we could get 100 signatures in 24 hours. And
Unclear how much overlap there is between those two lists, but it's a good idea.
It's a big
yeah.
tent. It's a big tent. The mass
Yeah,
monsters.
it's a big
and
tent.
tech.
It's a big tent.
Get them
And-
all in there. Why not?
And look, I think before we talk shop, I also just have to make sure I really reinforce what you guys are doing here, really trying to turn LA and more broadly Southern California into the Silicon Valley of media. Like this is a gargantuan effort, but a very important one. And I think
Yeah.
you have this foundation emerging over in Malibu where you have these esteemed podcasters like the Rick Rubins, the Andrew
Yes.
Hubermans, the
Yes.
Jordy Hayeses,
Yes.
kind of settling in. So it feels like you're well on your way.
The
And the last thing
center.
I'd say on this,
Yeah.
go ahead.
No, go.
Go ahead.
I just think it's important that we dream a little bigger than that, right? In the sense that Southern California is the closest thing to the Amalfi Coast that we have in America.
Yep.
You look across to
It is.
Catalina, it's our Capri.
It
Yeah,
is.
there's no
It
super
is.
yachts. There's
It
no
is.
super yachts. There's
It's
no
devoid
luxury
of it.
experience. Like we got to fix this. And so I just
You're so
want to
right.
encourage you guys to keep going on that and keep pushing. And I think it'll lead to some really great things for what I think is all three of our hometown of Southern California.
Yeah, I mean, the natural evolution is, potentially we had 100% tariffs on foreign films
Yes.
get potentially announced yesterday. I don't know how real it is, but I mean, a natural next step would be, 200, 300% tariffs on foreign podcasts.
Yeah.
And to really kind of generally I'm a free trade guy,
Yep.
but when it comes to podcasting, I
Yeah.
want to support.
So
domestic
we were in
podcasting
we were in
production.
Ojai this weekend, and we noticed that it was just devoid of high finance, and there wasn't a single Goldman Sachs office or high frequency trading operation there.
Yeah,
And so
Jane
we
Street,
announced
nowhere to be
our
found.
campaign to save Ojai and bring finance to Ojai and really get the cubicles there, get the stimulants flowing. Get
Yeah.
these folks to work hard and really save Ojai, but we should do that for Catalina. We
Yeah.
should save Catalina from the problem of boats under 50 feet
Yeah. Yeah.
because it's a big problem out there. Most
And
of the
fishing
boats are small.
notoriously unreliable. You might have a good year, have a lot of yield,
Yep.
and then you might have a down year. Whereas hedge funds, figure out a way to generate alpha in any market conditions.
Stock the ocean with new
That's right.
fish to hunt.
And related to this, Augustus was talking a little bit about what to do with Alcatraz, right?
Yeah.
I mean, who isn't a mega yacht owner in San Francisco that wouldn't want to bring their boat into the San Francisco Bay and enjoy what Alcatraz has to offer? So I think there's another dimension we can kind of take the Alcatraz conversation that sort of aligns with what Catalina has in terms of its potential. So there's a lot of good work to do here. And I just want to say I appreciate you spearheading this effort.
Yeah, there was kind of a controversial post from, what was it, Christina over at Bain Capital, right? She was saying that Alcatraz should be a Four Seasons resort where you pull up in a fancy water taxi to White Lotus style, not a federal prison. But I mean, a lot of people were firing back, being like, this would obviously be better as like an Amman, and instead of a water taxi, you should be pulling up in a super yacht.
I haven't heard of a VC going to a Four Seasons in about 15
a decade,
years.
Yeah. But
so
what is your?
Both these places have a lot of potential.
Yeah. What is your top pick for Alcatraz revitalization?
I'm not sold on the idea of reopening the prison. Anyone who's taken a tour of Alcatraz realizes it doesn't look like The Rock, the movie that is, which is very disappointing if you're a fan of The Rock in that shower scene where it all starts. But I think this 5-star destination in the making idea that Christina floated, again, up-leveling the Four Seasons to the Amman, up-leveling water taxis to super yachts. Like, I think this might be the best idea, at least floating out there right now.
I like the idea of turning it into what are the regions in the Mediterranean that like don't, or not Mediterranean, Caribbean, that don't really have any financial sort of rules, like
tax haven.
Yeah. So if we turn it into a place that VCs could generally solicit,
it should be the Puerto Rico of the Bay.
Yeah.
You should, and if you go there, but you have to spend 6 months and a day on the island.
Yeah.
If you leave,
I mean, we're trying to inshore the crypto industry, so all those folks living their life in Puerto Rico right now, like, this might be the answer. So
it should, really should be.
Keep pushing these big ideas. Somebody's got to do it, and I think you guys are doing a really good job.
Yeah, I love it.
Amazing. How's your first real day on the job? It's today, right?
Yeah, change doesn't happen often in this industry, so it's been really exciting. It kind of feels like the first day of school or something, where I'm just meeting a bunch of people I've never met before, getting up to speed on how we do things here. And there's a lot of similarities in how the firm operates relative to where I was at Kleiner Perkins, but given the global footprint and just the scale of the firm, there's a bit more process that we use to run our operations here that I'm kind of getting used to. But super excited about this opportunity. I mean, I think it's just such an incredible time to be investing right now. And given we're kind of in the midst of this super cycle, I'm just really, really excited to kind of hit the ground running here at Lightspeed and make the most of the opportunity in front of us.
And it's a pretty big change in terms of like your actual focus, because I always thought of you as like the growth guy at KP, and now you're early stage. Is that right? Is that a correct characterization?
So Everett would be the growth guy at KP, but I think what's unique about KP is we preside over the growth and venture funds together. Right?
Sure.
So every investor makes growth investments, every investor makes venture investments. And for me, my roots have always been early stage. I love, pounding the pavement, going to Stanford, figuring out who that next postdoc is that's going to start a company, figuring out who those amazing people inside of these juggernaut companies like OpenAI and Anthropic are, kind of those next great founders. And I think the tension for me has always been like, how do you put your best foot forward on early stage while also running growth stuff down? And so here, what I'm really excited about is we've got a dedicated growth team, and I can really go back to focusing on those early stage roots of where I started. And that was a big, big driver for me about why I was so excited about this opportunity.
Is there some sort of like, how would you define the delineation between growth and early stage at Lightspeed specifically? Is it like certain round size, certain valuation, certain just like you're getting out an Excel model for the first time, so the growth guys have Excel installed and the early stage team hasn't touched it in years?
Yeah, I mean, I think that's a fair depiction of it, in the sense that if there's real venture risk to a company's standing in terms of like a total loss of capital is a possibility, there isn't a ton of repeatability in revenue generation or how they put product in customers' hands, I think that feels a lot more like a venture type of investment. Whereas if there is that sort of repeatability, which for certain companies, especially in AI, can come very early in their life, given just the market pull that we're seeing, setting aside quality of revenue and that whole debate, you're starting to see more and more that these companies become growth stage companies very quickly. So I think what I'm really excited to focus on here at Lightspeed is like, how do we get into those companies as early as possible? Because they can be 6-7 months old and suddenly it's a growth stage opportunity. You've kind of missed the opportunity to get that venture exposure that really does, at the end of the day, drive a lot of the returns for this industry, at least historically.
Yeah. What is the shape of like these AI companies and where they fit between growth and venture? Because I saw some firms were putting OpenAI at 27 billion in venture, which wound up being like a venture style bet. Like it, it could have kind of zeroed with, all the complexities around you're investing in a nonprofit at that point. Like it does have binary risk, but again, it's like almost 10x or something. It's been like a venture style return very quickly. On the same time, you have a lot of these very hyped AI companies that are maybe wrappers would be the negative critique. They're generating a lot of revenue, but everyone's worried about churn and durability of that revenue. It reads like a growth stage company, but maybe it's more of a venture bet. How are you seeing the AI landscape kind of break down?
Yeah, so to the question about OpenAI and that being a venture bet, I think it's even more clear today that the investors that participated in that round, again, there's a lot of dilution that comes along the way,
Totally.
but if you look at it just on like a multiple evaluation basis,
Yep.
there is absolutely a venture-like return to be made at that
Totally.
round, and that's going to make a lot of funds that went in big there.
Yep.
I think with respect to your second question about just like how these wrapper companies sort of fit into this box. The first thing I'd say is I think it's becoming clear that when you look at the mature companies that were once referred to as wrappers, like the Harveys, the Cursors of the world,
Yep.
they're getting a lot fatter in terms of like how much of the tech stack they own themselves and how much differentiation you can argue that they build in. So an example in Cursor's case is like they've been very public about like the people they want to hire are people that can help them train models. Why is that? Well, the cost that they have to pay to the model providers, as we all know, is non-trivial, hence this wrapper distinction being a bit pejorative in nature.
Yeah, of course.
And so what I think you're going to start to see happen is that these breakaway companies that were once AI wrappers, once riding on top of the existing frontier model companies, are going to get a lot fatter in that sense and start routing as much of the queries that their users have to models that they can control and own and customize for that use case.
Yep.
So that's like one trend that I'm seeing. But I think to your point about the quality of revenue, the capabilities that these products bring, especially those that kind of have a prosumer adoption motion, are just so alluring and magical that everybody's going to try it, right? And not everybody's going to stick around. Not everybody's going to stay with that product, and they might go to another. But from my perspective, I don't think as much about that because I just think the pull for these is so extraordinary that over time you can think of that as a bit of a marketing cost, and the quality of the revenue at steady state, especially as these products get brought into larger companies. Go from kind of credit card swipes to invoicing customers, you're going to see that these companies look a lot like traditional enterprise software businesses, but in theory, they're going to grow and compound at much, much larger scales.
Yeah.
How do you think about the competitive dynamics and differences between B2B sort of enterprise focused agents and consumer agents from my point of view in evaluating a lot of consumer agent businesses lately? A lot of my thinking comes down to, okay, this is not necessarily explicitly on Anthropic's or OpenAI's roadmap, but I can imagine, 6 months from now, they just sort of like immediately enable something like this. Where on the enterprise side, when you look at businesses like, for example, like Harvey, something like that, it's like, okay, there's a ton of functionality and features that to me feel like there's much more of a long-term kind of like value proposition and moat here. But I'm curious to hear how you think about the differences.
So I agree directionally with everything that you said. And with the caveat that I'm not a consumer investor, it intuitively looks to me as though a consumer agent is only useful when it can do everything from planning my kid's birthday party to booking the flight, everyone's favorite example, to really just like automating away all these tedious tasks that I would otherwise be clicking through websites to accomplish. And I just haven't seen a consumer agent that can really do that in a holistic sense yet. And I think someone will figure it out. And I think that someone will most likely be one of the frontier model providers because this is just such an important use case for them to get right to kind of maintain that core consumer mind share that they have today. So on the consumer side, my bet is on the model providers, but I just haven't seen anything that really lives up to the product that I would be compelled to use. And I think like one distillation of that is like the moment you ask it to do something and it can't do it, you just get a little frustrated and it breeds distrust and you kind of move on and go back to doing it your way. So that's sort of where I see consumer today and where I see it going. The enterprise side, on the other hand, is much, much more interesting to me because I think you can create a tremendous amount of customer value by going narrow. So you mentioned Harvey. There are companies obviously doing this in code gen and trying to abstract away parts of the software engineering process. There are some really interesting companies that are kind of going after like the people that use Datadog, for example, and helping automate the human intuition that goes into munging through all that data when your software breaks. There's obviously a ton of stuff happening kind of more on like the process automation side of the back office that like a financial institution or large enterprise would have. So I think we're already seeing those products like hit runaway trajectories. And the reason for that is because like the products work and they do a simple job really, really well. And I just think that's a lot harder to deliver on the consumer side in a way that's compelling. So my sense is the inflows that we see into like agent investing will be very heavily concentrated on the enterprise side. And I think that those companies are going to get very, very big for the obvious reason that they're starting to chip away at human labor budgets rather than tool budgets. And I'm seeing that with my own eyes today. Like I feel like I'm seeing the future every day when I meet these new companies that can just they just have superhuman capabilities in terms of some of these enterprise tasks they're automating.
Yeah, that makes sense.
Yeah. What is your take on like the rapper meme? It felt like a VC psyop basically to me, in the sense that like a lot of VCs were like, hey, maybe there's some rappers out there that they might get steamrolled, but they're going to be fantastic lifestyle businesses for a few years. And then we had the windsurf rumor about, kind of a pretty fund returning result if that deal goes through. And so it feels like, is the windsurf acquisition potentially like an Instagram moment where it kind of unlocks like a new mindset around the ability to go and build businesses in AI, and it won't be totally winner take all, or like the category as a whole there will be monopolies, but not just one. There will be pockets of value all over the place.
Credit to Bucky too, windsurf angel investor.
Really? Very nice.
Proud angel investor before it was windsurf, and I have to give credit to my former partner Lee Marie for leading that investment at Kleiner Perkins. She's amazing, and it's a really special company. Yeah. So what I'd say about the windsurf rumors, if true, to me, what it foreshadows is this notion that there will be probably more chips to fall, not just in cogen, but also just more broadly in these like core categories of agentic work that the model providers are going to want to get into. OpenAI famously said anyone who's an investor in a company called Glean is not allowed to invest in OpenAI anymore. Glean is an enterprise search product that kind of does retrieval over all of your business data and incorporates it into the model so you can gain intelligence from that. To me, that's indicative of them looking at that piece of turf as something that they want to occupy. So to the rapper psyop question, like I would completely agree, and you need to look no further than all the top funds voraciously trying to invest in as many of these companies as possible to know that that's a psyop. That said, I think the scaffolding of why these companies are very, very interesting to me is that ultimately the way you do retrieval of all this enterprise kind of first party data is what makes these products like good versus great, right? And so in a sense, if you look at Windsurf versus Cursor, Windsurf has figured out some tricks as to how to essentially pass the model better context, and in doing so generate better outputs for their users. And what that to me says is that like really the IP of these companies is going to largely be around how they do that retrieval and how they bring that data into the model at the right time and in the most efficient way. So I think, and given cogen is the most mature category, you're kind of getting to see how that plays out. So I think what you're going to start to see is like, the winning companies, like be it in legal or cogen or any of these other categories that we've been talking about, are going to be the ones that figure out the best set of retrieval steps to give the models optimal context. And then coming back to what I said earlier, I think these companies are going to look a lot fatter than the rapper name might indicate over time. And again, you're seeing this with Cursor, Windsurf. Yep. These companies are, really out there trying to take more and more of the stack on versus just being like, dependent entirely on a frontier model provider. I think it's safe to say the same about Harvey. They recently published a really interesting blog post that kind of shows the architecture of their app in terms of how it interacts with the AI models. And what you see very quickly is it's a lot more than just a wrapper around. Yeah, and so I think that trend's only going to continue. And it's why I think, we at Lightspeed are very bullish on this form factor of company. And I think you're going to see a lot of activity from us there over time.
From how have you personally evaluated, businesses that are looking to eat into effectively labor spend through rolling up businesses versus companies that are looking to get into that on a ground up basis? And I don't have a ton of context on Harvey's business, but from what I would guess right now, it maybe looks more like a SaaS business today, but over time it could look like more like it, it's sort of eating more of the value chain.
Like what Salesforce did, where they get comped on per ticket closure as opposed to just pure seats.
Yeah, results basically, or output. But I'm curious.
Go ahead.
Yeah. Sorry. Yeah, just this nature of, ground up, new software businesses that are leveraging AI versus this sort of buy and build on top of strategy.
Yeah, so I think this question is sort of being answered collectively by the industry, like as we speak, as in like there's a lot of chips on the table around this notion of like, hey, what if we go and buy the BPO in India and inject AI into it? Or what if we go and, buy the homeowners association administrative businesses all over the world and inject AI into those? Yeah, just an idea off the cuff I had. And then on the other end, you're seeing companies like Harvey that are saying, no, the right way to do this is kind of to deliver like AI native value in the form of a co-pilot like product. And then over time, you start to chip away at the labor spend and bring more automation to bear. The first thing I'd say is that I think one of the mistakes that a lot of investors have made looking at these companies early is seeing the product as it was like then and not imagining how fast it was going to get better. part of that is obviously just the models getting better. And I think just like when you have like logarithmic rates of improvement, it's just really hard for the human mind to like intuit that and look forward and actually feel like confident in, okay, this is what it's going to look like a year from now.
Mhm.
So for example, I think it's fair to say that if you met Harvey at, C or Series A and you saw the product, you'd say, hey, I don't know if there's like a lot here. It's hard for me to see how this is going to be like a daily active use for the average lawyer. But what's happened is that product has gotten so much thicker and more capable to some degree because of better models, to another degree because of the in-house engineering work they're doing around how the information is retrieved and delivered to the end user. And so that product is just a totally different beast than it was, a year or two ago. And I think you're starting to see that reflected in the growth rate and more importantly, the product engagement of these products. So that's kind of one point on that end. And then I think with these turnarounds, like I haven't spent a ton of time digging into these. I think my high level concern would be one, do the people that know how to bring the AI into these products know how to run the the BPO or the call center operation or the community association administrator. I just think these are kind of oil and water like DNAs, and it feels a little bit like Doge coming into the U.S. government and telling all these people what to do. I think there's going to be some friction like that.
Of course.
But on the other hand, having that existing distribution and scale is really, really powerful. So I can see how there'll be a lot of enterprise value created by these if they can kind of manage that DNA mismatch that I foresee being an issue.
Yeah.
So if you're asking me, I'd much rather invest in the AI native company. One, and the other thing I'd say is that if you're the AI native company, say competing with the company that's transforming itself around AI, what I see out there right now is that there's sort of a board and CIO level mandate to just adopt as much AI as possible. And they look at it almost as existential, as if like their business is going to perish if they don't do this right. And more immediately, they're going to get fired if they don't do this right. And I think if you can, and what I see with the best companies, like you could say this about Windsurf, you could say this about Glean and some of the other companies that I've been somewhat close to, is that if you can get mind share with the CIOs, there's this mimesis that plays out where then the next one has to buy it and the next one has to buy it. So I think really being first and being looked at more of as like a true pioneer of the space rather than like a company that's being competent about how they bring AI into their existing products is just a much, let's just say, sexier position to be in when you're going and talking to CIOs and CEOs of these really large corporations. And so that's the side of the fence that I'm more inclined to bet on as an investor.
Makes a ton of sense. Let's talk about outcomes. I think in 2021, 2022, or especially early 2022, everyone was writing to lots of $10 billion outcomes. That was like maybe the general sentiment. You shared recently that you're thinking about $1 trillion outcomes now. Is the right framing as sort of a scaled platform fund to be thinking about making sure that you're in the handful of companies that over time can be $1 trillion businesses versus just expecting tons and tons of these $10 billion plus companies?
Yeah, so just to reiterate my position there that you mentioned, like what I see happening right now is that there are companies that seem to be scaling into market opportunities at a rate and scale that we just really haven't seen before. They can actually convince me that there will be companies that cross $1 trillion valuations in the private markets. Like, of course, many companies have done this. Well, I shouldn't say many, but some of the great household name companies have done this as public companies, and a lot of the value has been created there. Obviously, now these companies are staying private longer, they're growing faster, and therefore I think it's not unfathomable to think of an OpenAI or a SpaceX getting to this place where we're talking about $1 trillion companies in the private markets. So what does that mean for the venture business? What it means is there's even more headroom in this later stage investing part of the business that the mega platforms operate in that to generate alpha there that I think just wasn't there before. So that's hard for me to ignore personally, and I think why these mega platforms like Lightspeed are in a really unique position to capitalize on that. I think there's an obvious question as to are these companies a point in time thing, or are they more foreshadowing of more of these to come? I think that's something that we're kind of figuring out as an industry and watching. But my instinct will be that just the problems and the ambition of the problems that founders are going after these days are just so like fundamentally massive that I think we will just see much, much bigger outcomes aligned with those companies that succeed at going after these like really fundamental problems like space travel, like intelligence, for example. And then I think with respect to the $10 billion outcomes, I mean, look, you're still going to see a tremendous number of those, right? I think that these AI app companies are like the large platforms are going to be very acquisitive of these companies. I think you're going to see things like MoveWorks, which ServiceNow announced, or the Windsurf rumors that OpenAI and Windsurf are having conversations around. Like, I think there's a lot more of this to come, and so I think the venture business will still be driven by those outcomes. But I think when we have these $1 trillion outcomes, even if they're few and far between, it just completely distorts and changes the shape of the industry. And I think that the mega platforms are well aware of that and architecting their setups with that in mind.
Yeah, in many ways, these bigger companies would prefer to avoid, 4 or 5 rounds in a row that are predominantly random SPVs with hundreds of underlying shareholders, that are then all trading those positions over time. And it's very chaotic. If you could just have, if you could get the majority of your cap table around a single dinner table for a few more rounds, you might be more inclined to stay. To stay.
For sure. Last question. Any lessons from Warren Buffett? He's transitioning out of Berkshire Hathaway. Obviously, a very different style investing from early stage venture, but at the same time, if Lightspeed keeps scaling AUM, who knows? Anything's possible.
Yeah, so I guess the thing, whenever I think about Warren Buffett, and I think technically Charlie Munger said this, but I sort of think of them as one and the same for all the lessons that they share. The one that I always come back to is this notion of the too hard pile, right? And so what the too hard pile refers to is when they see a business that someone is trying to pitch them on being a really compelling investment. If it doesn't necessarily fit in the box of like their circle of competence and their ability to underwrite that business like with an unfair advantage, it goes in the too hard pile, even if it ends up being a great investment. And look, I think venture is all about exceptions, but at the same time, I think knowing your strengths in terms of how, like the type of people that you can read and work with, the types of markets that you can understand, the type of companies that you can start to really like dream with and kind of look out forward and have a sense and intuition of what they can be. There's this notion of a too hard pile in venture there, where I think sometimes the mistake that venture investors will make is they'll run after things that they don't actually understand, either at the personal level or the market level. Yep. And what I think I've really learned in the 11 or so years I've been doing this is like there is a notion of a too hard pile in venture and just like sticking to your strengths and really being open-minded, but at the same time, like understanding your core strengths that you can anchor on as a picker. And so that would be my answer.
That's great.
Great answer.
Well, thanks so much for stopping by. Congratulations on the new job.
Come back on again soon.
We love personalities here. We really appreciate you hopping
Massive
on.
Day.
We'll talk to you soon.
Thank you for having me.
Bye.
Cheers.